Welcome to the FitBUX channel. If you're watching on YouTube, welcome to the FitBUX podcast. If you're listening, we got an awesome episode today, especially if you're a student. And if you're not a student, but you know other people that are students, you might want to reach out to them and tell them, hey, like, if you got an old 401k or traditional IRA and you're a student, you're going to want to listen to this. Why? Because I am going to share with you a journey of a student that we recently worked with that turned a 401k from a past job into $600,000 of tax-free money in the future. And he also has access to $60,000 now without penalty when he graduates. And he could use that money to repay student loans with. He can turn around and use that money for a house, whatever he wants to. I'm going to show you exactly how he did it. So if you're a student and you got old retirement funds like a 401k or a traditional IRA, you're definitely going to want to listen to this one. Before we dive into it, make sure that if you're new to this channel, hit the subscribe button, hit that notification bell. It will notify you when new episodes are out. Plus, it helps us grow. So thank you very much in advance. If you're listening to the podcast, then be sure to subscribe there as well. Again, if you're new and you don't know, you haven't seen any of the episodes, my name is Joseph Ranke. I'm a CFA charter holder. I've been in finance for like 20 years now. I'm the founder of FitBUX as well. If you don't know anything about FitBUX, we have a technology out there that basically is AI for financial planning. And we built it for us to be efficient, to help you guys with your financial journey. So instead of having to charge you like $3 to $5 grand like most financial planners do, you can sign up for as little as $189 a year. You get the technology plus the access to the experts for everything's included in that price. So if you need help, let us know. With that being said, let's jump right into the episode. Okay, now this is a story, like I said, of a student. His name was Alex. Okay, now Alex, he went back to grad school right around 29, 30 years old. He had been working for 5 or 6 years. Had been putting money pretty aggressively into his 401k, hit some growth into that 401k because of what was going on in the stock market. So he had $60,000 already in a 401k when he went back to school. Now, he didn't think about doing anything with that money. I don't want to name him what school he went to because he actually asked me not to give out too many details of himself. But it was a school that we do a lot of work with for their orientation. Like they have myself or one of our other FitBUX experts come in and talk to their new students about student loans and what they can do while they're in school to put themselves in a good financial situation, so on and so forth. And I brought up this trick to him that I'm going to go through with you guys today. And he was like, holy cow, like I think this is like perfect for me. So he stayed and talked to me afterwards, and he signed up for FitBUX and we went through his stuff. It's like, yeah, you could totally take advantage of this. Okay, so he was in a graduate program that was going to take 3 years for him to graduate, and he wasn't going to be working. He was going to work a little bit, but he might only be making like 3 or 4 grand a year. So very low tax bracket, meaning zero like taxes that he would have to pay, okay, or zero taxes on his income. All right. Now, what ends up happening is that he could roll over his 401k into a traditional IRA, which anytime you leave an employer, you should always roll over your retirement account. That's our recommendation. Some people say leave it. The reason why we always say to take it with you is because, one, it's cheaper to have an IRA than a 401k, for example. 401ks are actually very expensive. Number two, IRAs are a lot more flexible in what you can invest it into. So you have more flexibility and options. When it comes to money and your finances, options are a good thing, okay? The one reason why you might not want to roll it over is because you can't take a loan against an IRA. 401k you can most of the time. But to me, you don't want to borrow against your 401k anyways. So that's why I always say roll it over, take it with you is what we could say in the financial world, okay? Now, going back to Alex's case, okay? First of all, he hadn't even rolled it over. So the first thing I told him, I said, look, you got to roll this over into the traditional IRA. So that was step one. We did that. He had it rolled over in about 2 or 3 weeks, okay? But here's the fun part, okay? When you have a 401k or a traditional IRA, if you take that money out before you're 59 and a half, not only do you pay taxes, but you also have to pay a 10% penalty. Okay? I'm going to repeat that again. If you have a 401k and a traditional IRA, if you take it out before 59 and a half, you are taxed and you are penalized if you take it out early. So therefore, you literally can't take that money out. Like, you have to have it there. So in Alex's case, he's like 30 years old. He's got to literally let it just sit there for the next 30 years unless he's going to get penalized and taxed very hard. Okay? Now, here comes the big trick, the loophole that you could take advantage of if you find yourself in this situation. You don't have to have $60,000 in one of these accounts. If you have like $5,000 or $10,000 or $15,000, you can do this as a student as well, and it's still very beneficial. Okay? As I mentioned, Alex was going to be in his program for 3 years with basically minimal income. And so what he can do is convert about $20,000 a year of that traditional IRA to a Roth IRA. And so by the time he did all 3 years at $20,000 a year, that means all $60,000 that he had in his 401k, he can then convert that to a Roth IRA. Why is that so beneficial? There's a couple of reasons why. First of all, from a retirement standpoint, okay, that money, when he rolls it over, he has to claim it as income in that tax year because it's going from a pre-tax account to an after-tax account. But since he's a student, he's going to be in a very low income tax bracket. And because it was $20,000, he didn't have to pay any taxes on it. So he was able to convert the $20,000 a year and pay nothing in taxes. So over the 3 years, he literally converted the $60,000 and pays nothing in taxes. That's number one. Number two, when he retires, when he lets that money sit there for 30 years, okay, at a normal growth rate, it will be worth about $600,000. That is tax-free. He could take it out and he never has to pay taxes on it. Whereas if he left it in the IRA, when he takes that money out, he's going to have to pay taxes on that money because he's got to claim it as income. Okay? So now he potentially says, hey, instead of $60,000, it grows to $600,000, and I don't have to pay taxes on it. That's an awesome place to be. $600,000. That is now not taxable. But here's an even bigger thing for him. Okay? When you have a Roth IRA, whatever you put into it is considered the contribution. So in Alex's case, he converted $60,000 into the Roth IRA. Okay? He has to wait 5 years. As long as he waits those 5 years, after graduation, 5 years after graduation, he now has access to that $60,000. He can take it out anytime he wants to without penalty. If he tried to do that and he had it in his 401k or his IRA, if he took out that $60,000, he would probably have to pay about $20,000 to $30,000 in penalties and taxes. But now he has access to the full $60,000. So now he has financial options. He can let that money sit there for another 30 years and let it grow tax-free. Maybe he had to say, hey, I took out student loans and it's costing me 8% for grad school. I'd rather just pay these off. He can withdraw the money and use it to pay off his student loans if he wants to. He can say, look, I actually want to take out 20 or 30 grand for a down payment on a house. He can do that if he wants to. He has access to his money. And that is how you take advantage of IRS tax laws. And that's why, like, when I do a lot of these orientations for universities or talk, a lot of students are like, well, we can't do anything right now because we're students. That's not true. There's always things you can be doing. And like I said, in Alex's case, he had $60,000. He had saved pretty aggressively. Some of you might be in a case, like we do this with people all the time that have like 3 grand, 4 grand saved, 5 grand saved, 10 grand saved. It still is beneficial for you and it's very minimal effort. Okay, we make the process at FitBUX very easy to do. Like your FitBUX expert that you schedule a call with will be able to walk you through the whole thing. And our technology as a student, if you guys want it for free, you just tell us you're a student and we'll switch it to a free account because our student technology is in beta version, so we don't charge for it. Okay, so If you guys want help doing this, let us know. If you find yourself as a student, comment down in the comment section if you're watching on YouTube saying, I'm a student, I think I can take advantage of this. Or even if you're not a student, but you think somebody else can take advantage of it, comment that as well, okay? If you have any questions, let us know too in the comments, because that's how we come up with videos for future stuff also, okay? Just to recap, as a student, you can take advantage of this if you have a pre-tax retirement account, turn that money into tax-free stuff. If you guys need help, you know how to get a hold of us. FitBUX.com, sign up. It's as little as $189 a year. We look forward to seeing each one of you. See you in the next episode. I'll talk to you guys soon.